Hello, my name is Siti Hazar, 26875. So I will explain about the background of the Malaysian Pacific Corporation Berhad or MPC. MPC was incorporated as Wealth Development Sdn Berhad on 23rd May 1973 and was a member of the Hong Leong Group until 2007. It developed the first larger shopping center office in Kuala Lumpur in 1973, which is known as Wisma MPL. The business core was property development and investment. The company was renamed Malaysian Pacific Corporation Berhad. The change was intended to pave the way for the company. In 2006, the company recognized a huge impairment loss. It's about 80 million ringgit Malaysia.
Now we take a look at the background of company Malayan Flour Mills Berhad (MFM) that is incorporated in 1961, is pioneer in the flour milling industry in Malaysia with 2 flour mills at Lumut and Pasir Gudang. It is now a regional flour player with operation in north of Vietnam, south of Vietnam and West Java, Indonesia. Beyond flour milling, MFM has also expanded into the poultry industry in Malaysia since 1983. MFM operates in the consumer products and services sector and listed in Bursa Malaysia under the main market. The company operates in 3 segments. First, the flour and trading in grains and other allied products, which is engaged in the milling and selling wheat flour and trading in grains and other allied products. Second, feeds and trading in feed ingredients, which is engaged in the manufacture and sale of animal feeds and related raw materials. And lastly, poultry integration, which is engaged in the processing and sale of poultry products, breeding and sale of day-old chicks, sale of eggs and contract farming activities.
Okay, Bismillahirrahmanirrahim. My name is Muhammad Akram bin Abdullah. My matric number is 273307. Alright, today I, as one of the representatives from my group, we explain about Maxim Global Berhad. So, the first one is, what is the background of the company? Let's take a look. Okay, first, Maxim Global Berhad started the business on 4 December 1988 as a Pacific Chemical Berhad and changed it to the TechMed Resource Berhad. But at the early November 2020, the company changed its name to the Maxim Global Berhad. If we search in the Bursa Malaysia website and we type the Maxim Global Berhad, the annual report will still have the old name, which is the TechMed Resource Berhad. So, what is their main focus? So, their main focus is on the property development, agriculture development, and industry supply.
Very good morning to Madam and my fellow friends. My name is Wong Guan Yan, number matric 269752. Now I will present the background for MK Land Holding Berhad. MK Land is an investment holding company and it has diverse portfolio of projects such as property development, property investment, and so on. On 27 August 1999, MK Land, known as Bursa Malaysia, after a reverse acquisition of Second Board Manufacturing Company.
Marco Steel Berhad is incorporated in Malaysia under the Company Act 1965 on 24 July 2003 as a public limited company. This company principal activities consist of investment holding and the provision of management service to its subsidiary. The sector of the company is industrial, product and service.
Next, I will explain about the disclosure of MFRS 110 even after the reporting period. There are 2 subsequent events that started in Note 35 on 21st September 2018. The first is Sale and Purchase Agreement. The company had declared that TBBM, LHRD and Chungfa have executed the shareholder agreement and also agreeing on the form of sale and purchase agreement. The second is issue and paid up share capital. The shareholder agreement whereby the LHRD will hold 35% and Chungfu 65% of the issued and paid up the share capital in the new co. According to MFRS 110, this event is considered as a non-adjusting event and there will be no change on the recognition and measurement of asset and liability as at 30 June 2018. For the financial year and the 30 June 2019, there is one subsequent event that have been recorded, which on 23rd August 2019 is major disposal of asset, namely land. the company and its subsidiary companies entered into settlement agreement with Amanah Raya, which involved the effective disposal of land amounting to 115 million ringgit Malaysia. This event is considered as non-adjusting event according to MFRS 110, and there will be no change on the recognition and measurement of asset and liability as at 30 June 2019.
Based on the 2018 financial report stated in the Note 28 to the financial statement, MFM have a subsequent event on 14 March 2019. The company increased its investment in PT Bungasari by subscribing additional 1,320 shares, approximately 5.4 million ringgit. Subsequent to the subscription, the percentage of ownership interest in PT Bungasari remained at 30%. Meanwhile, in Financial Report 2019, stated in Note 29, MFM has a subsequent event on 29 January 2020. The company increased its investment in PT Bungasari by subscribing additional 5,713 shares, approximately 23.4 million ringgit. Subsequent to the subscription, the percentage of ownership interest in PT Bungasari remained at 30%. Both subsequent events are same events, which is MFM subscribed additional share from PT Bungasari and it did not increase the percentage of ownership interest in PT Bungasari. Based on MFRS 110, subsequent events after reporting period, these events for both years are non-adjusting events, therefore it just needs to be disclosed in the notes to the financial statements.
So let's take a look at the MFRS 110 event. Okay, at the 2018, there has no event, but at the 2019, there has two events that can be disclosed according to MFRS 110. The first one is a development, a new project. Together with Worldwide Holding Berhad and Korea Electric Power Corporation, they have formed a combination to proceed the new project. So, the major combination of the new project can be related as a non-adjusting event according to MFRS 110. The second one is unable to reliably estimate the financial impact on group during pandemic COVID-19. The management cannot estimate the effect of its financial effect, so it can be clarified as non-adjusting event.
Now, discuss the MFRS 110 event after the reporting period for MK Land is development or project land on 15 August 2018 as shown in Note 37 on the financial statement. Besides, based on Note 37 in the annual report 2018, the second significant event is issue and pay out the ordinary share capital for NMSB. NMSB become an 85% owner indirect subsidiary of MK Land Holding Berhad on 27 September 2018. The two significant events considered as non-adjusting events according to MFRS 110 because they are not changed on recognition and measurement of asset and liability at 30 June 2018.
For Microsteel Berhad in year 2018, there was an adjusting event which is the acquisition of factory leased land and building. The condition of the event is available on 20 November 2017 and the purchase payment is made on 30 August 2018, which occurs between the end of reporting date of 13 June 2018 and the date of insurance of 25th October 2018. Well, for non-adjusting event was changes to departure which occurs on 16 August 2018 after the end of reporting period.
Next, I will explain about the ratio. We have three companies in the same sector for property sector for Maxim, MPC, and MKLand. Based on the chart show that Maxim has a good financial operation which have the highest ability to pay its short-term debt by using its current asset, and also for MKLand that has ability to pay its debt in 2019. However, for MPC, the company is still not improving their liquidity and efficiency because their ratio is decreasing and lower than 1 in the both year. In the nutshell, Maxim will be a favorable company to be invest in the property sector. For MFM, in 2019, which show an improvement in the ratio. This indicates that MFF ability to pay short-term liability. Also, for MSB, that has ability to pay its debt in both years because the ratio is above 1. Next is inventory efficiency ratio. Maxim having a good sales or buying inventory in both years because the company have the highest ratio, and for MPC and MKLAN, it's advised to sell all those obsolete inventories for a lower price than market price that satisfies the customer's need. For MFM, it means the company was more efficient in sell and replace the inventory for 2019 and then 2018. And the last is for MSSB, had decreased the rate of movement of the goods into and out the company, which might result from the poor inventory management.
For trade payables days under financial ratio analysis, in the property sector, Maxim has the highest ability to pay the obligation to creditors with the lowest trade payables days of 89 days in financial year 2018 and 98 days in financial year 2019. Compared with MPC, which have trade payables days of 0 and 100 days for financial year 2018 and financial year 2019. While trade payables days for MKLAN is 453 days in financial year 2018 and decreased to 293 days in financial year 2019. This shows that Maxim have effectively used the profit that it gains to make payment for the creditor. In short, the supplier and creditor will be more confident to give Maxim some auspicious credit terms or extend further credit. For the company in other sector, the trade payables days of MFM in financial year 2019 were 12 days, while the average days in financial year 2018 were a bit lower compared to 2019, which took only 11 days. Meanwhile, in MSB, there is slightly increase in trade payables days. MSB need an average of 82 days to pay back its account payables in financial year 2018, while 84 days is needed for the financial year 2019.
For the financial ratio analysis, working capital, for the overall, we can see that MFM has the highest working capital, but in a property sector, MKLAN has the highest working capital. We can say here that MKLAN can easily fund daily operation better than Maxim and MPC. So, MKLAN unlikely to take a debt to fund its daily operation because they have enough money or working capital to continue their daily operation.
The trade receivable days for property sector in our project, which is Maxim, MPC and MKLAN, show that the Maxim have the high ability to receive the debt from debtor in lower trade receivable days, which is 28 days in 2080 and 38 days in 2090. As shown as on the table. Next, the ability for MFM to receive the debt from debtor remain constant because the trade receivable date for 2080 and 2090 are same. While for the MSB, so the ineffective to collect their outstanding because the trade receivable date for MSB are decreased from 2018 to 2019.
So I will present about the sales to working capitals. In the property sector, Maxim has the highest sales to working capitals ratios of 2.44 in financial year 2018 and 4.6 in financial year 2019, compared to MPC and MKLAN. This shows that Maxim has the effectively working capitals and is used by the company for generating income. So, Maxim will become the beneficial company to invest in the property sector. The sales to working capital ratios for MFM and MSB in financial 2018 are 3.35 and 6.96 respectively, while in financial 2019, for MFM and MSB are 3.62 and 5.09 respectively. Conclusion. For disclosure of MFRS 110, we can conclude that there were no adjusting events that has been reported frequently among these 5 companies. We also conclude that key audit method is important information to be disclosed in an annual report because it can increase the public confidence in the financial statement of companies. By overviewing the working capital management of those 5 companies from the comparison in the property sectors among these 3 companies, we can conclude that Maxim can be the most considerable company to be invested in. All in all, from this project, we have learned the application and disclose of MARS 110 and analyze other related disclosure, which is key audit methods and measure companies' performance using working capital management radius.